You're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me, Shail Bhatnagar, our markets editor. Well, with cues improving on Wall Street, local bulls are likely to enjoy a day under the sun. But what should be your strategy going forward, and where are the markets headed? We'll discuss this and much more. But first up, the top headlines for you. Indian shares may bounce higher on Thursday as overseas cues improve and the end of a weekly F&O expiry forces shorts to get covered after sustained fall. Overstretched mid-caps may see a bout of profit booking after the recent run-up in prices puts valuation in the upper quartile. Extreme caution advised on long side. Very good morning, Shail. Good morning from Mumbai, actually. So if we talk about markets, domestic equities saw a spillover effect, I would say, from the global markets yesterday. And, the Q2 earnings season will also start from next week. And also it's expiry today as well. So where do you see Nifty and, what should be the strategy for all the investors?
Firstly, good morning to you, Tanya, and it's such a pleasure to see you join us from the financial capital, Mumbai. Good morning to all our viewers who've joined us on this lovely morning in Delhi on Market Today at BTTV. Yes, it's the weekly expiry on the Nifty today, and only for today, Tanya, I see a nice bounce coming in for a variety of reasons. It's a collection of facts that has happened to improve the sentiment for just one day. So overall trend is weak, but today it being a weekly expiry and the fact that we've sharply come down over the last 1 week, over the last 15 trading sessions actually means that from a 1 month low, you'll probably see a gap up on the Nifty, and then of course that gap up either might move sideways or you'll see profit booking coming in. But essentially a green tick is expected on weekly expiry day on the Nifty, at least for today. And let me enumerate the cues that are positive for the markets today. First and foremost, it's crude oil futures that have come off very sharply, dropped 5% yesterday because gasoline demand in the United States, the world's biggest consumer of petrol and diesel, shrank sharply because of the kind of rains that you've seen in New York, as well as a lot of local events in the US. And over the last 1 week, crude oil has actually corrected 10%. I'm so sorry, $10 per barrel. So that's something which is positive for Indian markets. So short covering, crude oil prices getting lower, weekly expiry day, and the fact that we've slipped very sharply over the last 5 or 7 trading session, that will lead to shorts being covered today. Well, that's the hope. There are 2 or 3 charts that I wanted to see. You have already seen the daily chart of the Nifty. I'll request the PCR to fire the 15-minute chart on the Nifty index, and from yesterday you will see that from about 2:30 p.m. onwards we saw a very sharp recovery happening on the back of Dow futures. Yes, this is the thing. So from a low of something like 19,335, the index closed at 19,436. So this is the pent up demand or the short covering, as you can see, that will boost the Nifty for today. And the 2 negative points that I see, Tanya, is that foreign institutional investors are really pressing the sell button. Yesterday's figure was a net 4,400 crore rupees from our foreign friends, and that's visible on stocks like ICICI Bank, on Axis Bank, All of them are FII favorites, and they ended up very sharply lower. The other point that I wanted to put into the whole setup is that for the last 1 week, the net FII sell figure is somewhere like 13,000 crores, mainly on because of higher US Treasury yields and the strength in the dollar index. So the overall trend remains weak for the Nifty, but for today, you just might see a nice dead cat bounce in the initial say 1 hour, 15 minutes, 30 minutes of trade, and that is what is coming in as far as the gift Nifty numbers are concerned, and the fact that in the Nifty options chain you see a very strong resistance coming in at 19,600. So that's possibly the cap. 50 EMA on the Nifty providing support, and 19,600, which is on the options chain, that is likely to be the resistance for today's trade. Tanya.
Okay, absolutely. So 50 EMA, that is providing support, and that's the verdict, coming in on Nifty. But let's talk about bank stocks as well, Shall, because they were among the top losers, in yesterday's trading session. And foreign
Yes,
funds
absolutely.
also continued their selling spree of Indian equities, as you rightly pointed out. And traders, I think they are also cautious, ahead of the RBI's monetary policy outcome on Friday. So, what should be the strategy, when it comes to Bank Nifty, and what are you looking on Nifty Bank today?
Tanya, you've hit it on the head. Yesterday was the weekly expiry of the Bank Nifty, and therefore you saw, a minor bump up when it came to the intraday charts. But overall, the structure is flat. You'll see the daily chart of the Bank Nifty in front of you, as well as the 15-minute chart intraday, and that shows that nothing much has happened yesterday as far as the Bank Nifty is concerned. But what is really bothersome is that there was a gap down yesterday, a very sharp gap down of about 300 points, and then the Bank Nifty actually opened below the 100-day exponential moving average, which has been a very strong support over the last 40 odd trading sessions for the Bank Nifty. That gave away yesterday for bear pressure, and that's a bit of a negative when it comes to the Bank Nifty. I haven't been, Tanya, able to find a single Bank Nifty stock yesterday where you saw a good build up of longs or short covering, except for HDFC Bank, but I am certain that it was just an expiry related move. But everything shows consistent weakness. Axis Bank was down 4.5% yesterday. PNB was down 4.3%. Remember, these are the two strongest charts on the Bank Nifty, and we are seeing selling pressure there. State Bank of India down 2.8% yesterday, IndusInd Bank 2.7%, ICICI down 1.1%. So these are the things that are bothersome for the Bank Nifty, and of course tomorrow is the credit policy. So a sideways to weak trend on Bank Nifty as well, and the fact that a lot of global pain, which is in 10-year Treasury yields, rising global inflation, and so on and so forth, is getting reflected in our Bank Nifty, Tanya. So flat to sideways, 44,000 is a very strong resistance. 43,800 is a strong support, which is coming in as far as the Bank Nifty options chain is concerned.
Okay, absolutely. That was Bank Nifty for you. And, Shell, let's talk about FNO space as well. I'm very sure that, there's a lot happening when it comes to FNO space. So what are you tracking there?
Sakshi, I'm so sorry, Tanya. I've deliberately stepped away from suggesting stocks today for two reasons.
Okay.
One, it will be an expiry related move on the Nifty, and we are ahead of the credit policy a day before the policy. So markets are likely to remain sideways to weak. It's best that we don't get into trades. There is no reason to trade regularly and to trade every hour unless there is a setup that justifies that kind of risk taking. Unfortunately, for today and tomorrow till 10:30, it will be a sideways to a weak market. Tanya.
Okay, absolutely. And, let's talk about global markets as well. Wall Street ended on a positive note. And if you look at the levels, the Dow Jones It rose 127 points to 33,129 odd level. S&P also gained 34 points at 4,263 odd level, and Nasdaq also added 176 points. And GIFT Nifty, that is also suggesting a positive start share. So what is now essential to track really from these overseas cues?
So, Tanya, I think it's a dead cat bounce that's happened on the Dow Jones Index. If you see the longer term 9-month performance, the Dow Jones Index is now flat. Whatever gains that were there for 2023 have been washed away. And that's how cues are coming in. For today, a strong bounce likely to happen from the positive close on Wall Street, both on Dow, the SPX as well as the Nasdaq. But overall, if you see the 10-year Treasury yield at 5%, fund managers need to do nothing. They just need to sell in all emerging markets globally, pull that money into the US market and buy a bond, sit happily and gain 5%. That's the reason why you see such a sustained fall happening across all emerging markets in Asia, across all commodities across the board. You see, gold is down for 9 days in a row. That is because of the strength of the dollar. And why is the dollar strengthening? Because the 10-year yield is at 5% and the money across the world is now moving back to the US geography. Strong dollar, therefore weak commodities. Strong dollar, therefore weak emerging markets. And higher treasury yields will pull money from across the world into the US markets. It's a cycle, and the cycle at the moment points to a risk off trade globally. So in India, we are positionally weak, but for today, you just might see an uptick. Tanya.
Okay, absolutely. That was the global update for you. But Shail, let's talk about the sectors also. I mean, there are certain sectors that that would be on your radar. I'm very sure. So why don't you talk to us about those sectors and any sectors that one should really avoid at this point in time?
Tanya, in all humility, I believe that mid caps and small caps are stretched. You've mentioned that as one of the main headlines as well. Extreme caution is advised. We are seeing a series of monthly and quarterly updates coming in from companies such as Bajaj Finance, Punjab National Bank, Bandhan Bank. They do point to a strong economic growth that is coming in. But remember, a share is different from a company, even if it is the same company and the same share that we are talking about. So whatever updates are coming, just as Bajaj Finance or Punjab National Bank, if the stock has run up very sharply, you will see profit booking happening. So Punjab National Bank announced a lot of details about its operational quarter in the previous 3 months. Very strong traction. But remember what happened? The stock actually lost 4.5% in yesterday's trade at 80. But the rally has been very sharp. We've seen a 70-75% rise in Punjab National Bank's stock price from 40-45 levels to about 80-85. And it's profit booking that's happening. Therefore, extreme caution is advised. I can talk about cement because of monsoons ending and pent-up demand coming back into the sector, but it will be just a blip. So we'll wait for the markets to settle. Let's see whether 19,200 remains with the bulls or not, and then probably take a call on the blue chip side. Mid caps and small caps are just overextended.
Okay, absolutely. Let's wait and watch. Meanwhile, just Shail, let's welcome our guest on the show today. We have with us, Sunny Agrawal, who is the head of fundamental desk at SBI Securities. Very good morning, Sunny. And thank you so much for taking the time out and joining us here on Business Today Television. We were talking about the FII selling and the overall, the trend that is on a weaker side. So what should be the strategy now for the investors, and how are you approaching Indian markets at this point in time?
Yeah, good morning and thanks for having me on the show. Definitely a big positive today morning was a deep cut of 5% in crude oil prices, and that was that has set the mood in a positive tone. So after seeing a massive rally of nearly $20 in crude oil prices during last 3 4 months, and it was putting pressure on inflation as far as Indian markets or global central bankers are concerned. And I believe the correction in crude oil prices is a kind of a relief for domestic equity markets. And but having said that, I think now henceforth the market will become a stock specific. So we are seeing a lot of companies announcing provisional updates for quarter 2, and we have seen all the banks and NBFC reporting a very at least in line or better than expected growth as far as the provisional updates are concerned. And the key update which I would like to highlight is from HDFC Bank. So on a pro forma basis post merger, the HDFC Bank has came out with a very rock solid commentary wherein they have they have went on record to say that gross deposits and advances have increased by 18% and almost 17.6% on a merged entity basis. At the same time, they have disbursed highest ever home loan post merger that is to the tune of 48,000 crore. This is a growth of almost 14% on a Q1Q basis and 11% on a year-over-year basis. And we all know that HDFC Bank has got a significant weightage in Nifty as well as Bank Nifty, and that was putting pressure on the benchmark indices. I feel we can see some short covering as far as HDFC Bank is concerned. The street is aware of the fact that there may be some margin pressure for a quarter and two as far as HDFC Bank numbers or profitability is concerned. But I believe the healthy growth in terms of deposits as well as advances uh, will be liked by the street, and we may see some short covering, and that will lead to the support to the entire banking sector, especially private banking sector. So I feel again a market is a stock specific market. We need to take a market sector wise or stocks wise based on the news flow. The correction in crude oil prices obviously augurs well for, we all know, for oil marketing companies, paint companies, FMCG companies, cement companies. So we may see some positive reaction over there. World Cup starting from today, tomorrow. So we will see some reaction, positive reaction from consumption sector, especially food delivery, QSR segment, travel segment, hotel segment. So there we find some money making opportunity. So a very stock specific approach one need to take as far as equity markets are concerned.
Fair point. HDFC Bank is Sunny's top pick, not only for today, but it's a real long-term asset that should be a part of your portfolio. And the interesting part about HDFC Bank, as is visible in front of you on the screen, is that it's corrected fairly sharply from 1750, which you saw in the month of July, to about 1500 rupee levels. Well, yesterday's move that you saw was more related to the Bank Nifty's weekly expiry, but at this point of time, you see the stock price trading at its lowest level since November. So it's a 1 year low, almost a 1 year low that you see in HDFC Bank. And absolutely right advice. This is a price to probably add piecemeal as far as a monthly SIP is concerned in HDFC Bank. It should be a part of your portfolio for the longer term. Do also take an advice from an independent financial advisor. Apart from HDFC Bank, Sunny, is there anything that catches your fancy in the auto ancillary space?
Yeah, definitely. I think today there is a news that Sajan Jindal Group is going to acquire a stake in MG Motors India. We all know that the promoters are from China, and that shows that even a new players after 20, 30 years of very pretty structural growth story, not all new players are eager to bet on the Indian automobile sector, and that shows that pretty long runway as far as automobile sector is concerned. And I would like to place my bet on auto ancillary company, and one of my pick is Minda Corp. So basically, the company is into the just a minute, I will check my. Yeah, so company is into the leading manufacturer of auto components with a significant global footprint. They are into diverse range of products such as mechatronics, information and connected system, plastic and interior, aftermarket, electronic market, excellent. And recently, company has won a very big order as far as EV portfolio is concerned. So 50% of the order wins are coming from the electric vehicle portfolio. Some of the new products like such as smart key lock for two-wheeler is likely to account for 15% of the total lock set revenue. And the value per kit of the smart key lock is almost 3x, 4x as compared to the manual key lock. So that's the So we are seeing a shift as far as premiumization is concerned for this company, and we expect the company's revenue to grow at a space of 20 to 25% over next 2 3 years on the backed by this new product development, new customer acquisition. And we feel that in FY23 the company has posted sales of 4300 crore, and my understanding is that company is likely to post sales of 5500 crore in FY25, and profit will grow from nearly 280 290 crore in FY23 to 340 crore with an healthy ROE ROC of 18 to 19%. So at the current juncture, although the stock may appear to be slightly uh, 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 pricier as far as valuation is concerned, trading at almost 22 23 times FY25 earning. But looking at a healthy growth, I feel the premium valuation will sustain, and one can accumulate this stock gradually for the price target of 400 rupees over the next 12 to 18 months.
Fair point. Minda Corp is right there as far as the stock price chart is concerned in front of you. Let me just share some other details. It's a outperformer on a long-term basis. The 5-year compounded annual growth return is somewhere like 19%. Each year, the stock over the last 5 years has appreciated on average by 19%. It's handsomely beaten the return from the BSE Auto Index, which is at about 11% CAGR over the 5 years, and at a price earnings of about 27 rupees. This is one of the shining beacons in the auto ancillary space as far as Sunny is concerned. Couple of other points. At about 7,700 crores in market capitalization, the company's promoted about 4,364 crore rupees as revenue in the past 12 months, and a profit after tax of about 288 crores. So Minda Corp and HDFC Bank should be a part of your long-term portfolios. These are long-term picks from Sunny when it comes to making strong portfolios in this kind of an environment. Let's wait for Rajesh Palvia as well. He'll provide the technical inputs as far as markets for today are concerned. But sticking to Sunny, Mr. Agarwal, let's talk about how markets are reacting on the mid-cap and the small-cap space, especially the sell-off or the profit booking that you saw on the PSU banking basket yesterday. Has the rally overstretched itself a bit in the mid-cap and the small-cap PSU banks, or do you see the fall as an entry point for newer players to step in?
I think now we can't paint all the PSU bank with the same brush. I think after the robust rally which we have seen during the last 3 to 6 months, now we need to segregate the banks into two parts. One is the large banks like Bank of Baroda, Canara Bank, where the earning visibility is pretty strong, as well as the valuations are still comfortable. So I feel now we need to be very selective and place our bet on banks like Bank of Baroda, Canara Bank. Indian Bank is a bank which we still feel is trading at a very cheap valuation, trading close to one price to book. A very robust asset quality as far as Indian banks are concerned. Growth outlook is pretty good. So I think rather than placing bet on a smaller size PSU bank, like which are the kind of turnaround stories like UCO Bank, IOB, Punjab and Sindh, and in fact, some of the PSU bank like Bank of Maharashtra, I feel the valuations have turned to be very expensive. I think it is trading now close to 2 to 2.5 price to book. So I think now we need to check the valuation before placing our bet in PSU bank, and better stay put with a larger size bank, because we know going forward the fight is going to be for deposits, right? As cost of funds are increasing, so the guys who have got a deeper reach in terms of bank penetration or digital penetration, so those are the banks which will able to garner more deposits, and hence they will able to sustain their profitability or NIM margin going forward. So hence going forward, the banks which are able to grow deposit at least at in line with the advances growth, those are the bank where we will see a good relatively better earning growth. Hence it is better to stick to a larger size PSU bank rather than going for a smaller kind of turnaround stories as far as public sector banks are.
Okay, absolutely. That's the word coming in. And Sunny, what about the QSR space? I mean, experts are saying that there is going to be a significant upside, for all these QSR stocks. What are your thoughts?
Yeah, definitely. So, historical data suggests that whenever there is a World Cup or any big sports event, we have seen uptick as far as same-store sales growth for players like Jubilant Foodwork. So that is the only company which has got a long history of trading and data is available with public. So we have seen 5 to 6% incremental jump as far as same-store sales growth is concerned, and definitely, I think we all are going to get engaged with the World Cup, and it's a kind of festival as far as the Indian sports fraternity is concerned. Definitely, I think at the same time, what is happening is that the concerns of the inflationary pressure from milk and milk product, I think that will start to ease going forward, and we will see some margin expansion as well for all the QSR company. So I think we are bullish on QSR space from a short term as well as long term perspective. In long term, definitely we all know that the opportunity is pretty large as far as the entire QSR industry is concerned. So that's a good time to accumulate the this kind of businesses in the long term portfolio. And anyway, from a December quarter perspective, we will see some uptick as far as the profit growth is concerned.
Right. Tanya, the absolute correct moment to look at pre-open trades. It gladdens my heart to tell you that Nifty's opened at 19,576. It's an uptick of 135 points. We'll see this entering sensible trajectory over the next couple of seconds. But it's such a lovely feeling to see this kind of a bounce back. Let me look at prices. ICICI Bank 2.5% higher, 950. Remember, this stock is approaching its 200 DMA. Bajaj Finance 1.67% higher, 7990. The company came out with a sterling set of indicative numbers for the past quarter yesterday. The Nifty now up 100 points, 19,550. Let's look at the heavyweights now. HDFC Bank first, 0.3% higher, 1535. Remember, Mr. Agarwal has advised this to be a good stock to be held for the longer term in your long-term portfolio. Okay, Reliance, 0.3% higher, 2323. And of course, Infosys, 1456 for today's pre-open, up 0.8%. It's a sea of green that I see. IT moving because of the bump up in the Nasdaq, and a lot of other stocks moving because of impending short covering in the market. The Nifty is actually strengthening, 140 points higher now, 19,576. Will this gap up be a dead cat bounce? We'll see in a moment. But for the immediate term, you have a very, very nice uptick. Axis Bank, the top loser in the Bank Nifty yesterday, is showing a smart uptick of 1% at 1,005. So this is how the structure is at the moment. Let's look at the FNO stocks beyond the index heavyweights. Okay, what I see in the FNO space is L&T Housing Finance. They came out with an update on their previous quarter performance, up 2%, 131.60. Oberoi Realty, 0.5% higher, 11.24. We'll ignore this completely. Okay, let's look at the high beta, low ticket item. Power Finance Corporation, 247, up 1.4%. Steel Authority, up 0.4%, 90. RECL, up 1.3%, 287. HDFC Bank gathering strength, 1.3% higher at 1550. Nifty now a sensible 125 points higher, 19,536. Just a peek into NSE 500. What are the stocks that are going up? Philips Carbon Black, this was Milin Vasudev's pick yesterday. Fresh record high, 2.5% higher, 180-170. IOX and IEX are two counters that are up 2%. Okay, let's wait for Mr. Palvia to join us and take his stock picks for the moment on the technical side. But a very, very nice green uptick coming onto the Nifty in the pre-open trades, 19,550, in sync with what we've been talking about over the last half an hour, 45 minutes. Mr. Palvia, Welcome to you. What a pleasure to host you, Rajesh. Your two stock picks for today and your view on the Nifty.
Good morning, Shailji. Good morning, everyone. So yeah, it's really a good sign for a market as we are seeing uptick in the pre-opening session and Nifty is trading around 19,500 level. First, I'll discuss my two stock idea, then I will have focus on the Nifty. So first stock is Granules, very strong buying action since last couple of trading session, and in the previous session of also, despite of market was in a down move, this stock was showing strength. And looking at the weekly as well as on the daily chart, stock is clearly showing there is a sustained buying action is happening in the stock. Even pharma space is also looking promising at the current juncture. So we expect that granules can continue furthermore upside. 375, 380 is the target where we are projecting for this stock, and one can buy with stop loss of 349. The second stock which we like, that is from cement space, that is Ramco Cement. Very strong buying action in the stock. Stock managed to view breakout of its previous swing high. Stock managed to view breakout of its previous multiple supply zone on the daily as well as on the weekly chart. So looking at the overall setup, long built up was there. So looking at the overall setup for Ramco Cement, we expect that this momentum can extend further. 378, 978, 986 could be the possible target in the near term. One can buy with stop loss of 938. Now we'll discuss on the Nifty. Nifty, if at all Nifty crosses on the spot above 19,550, then we can see a short covering action in today's session. As the beginning of October series, there is no as such short covering has been taken place till now. Shorts been rollover from September series, and that we have seen that follow up selling in the market for the October series in the first week. But now, if at all, as the call writers are aggressive at 19,500, 600 strike, if we crosses 19,500, then there would be a short covering action in the market, and then possibly Nifty may attempt to move further higher towards 19,580, 19,650 zone. That is the another challenging level on the higher side. So as of now, Nifty is now slipped below to 50-day moving average. So trend is on the bearish side for the near-term setup. But yes, if we cross 19,550, 19,600, then there is a possibility then we can see follow-up buying action to continue further. And Nifty may start moving up further from the current level. On the downside, 19,350 is the crucial level. Till these levels are intact, some ray of hope towards pullback is there in the market. For Bank Nifty, the major important support area on the downside is at 43,700 now on the Bank Nifty spot. If we hold those levels, some pullback we can see in the Bank Nifty also. But again, on the higher side, 44,400 is the key level to watch for. Until we are not able to cross those levels, there won't be any short covering action. Significant short covering action will play out in the Bank Nifty. So above 44,400, there would be again comfort on the banking space also. Short covering will give some comfort on the buying side. So that level needs to be watched in the today's trades.
Absolutely. So these are the levels that are coming in. And let's talk about some specific stocks, Mr. Palria. And let's talk about Bajaj Finance only. The chart looks really strong there. So what are your thoughts on Bajaj Finance, and what do the technical charts suggest?
So of late we have seen stock has given a breakout of its last multiple supply zone on the weekly chart, and looking at the overall structure, stock is in bullish territory for near-term, short-term setup. Stock is enjoying above all its important moving averages. So if stock continues to hold above 7,700, 7,750 level, the trend is likely to remain on the buying side. On the other hand, once stock crosses above 7,950 level, then this rally can extend towards 8,250, 8,300 level also. So overall, if we look at on the NBFC space, Bajaj Finance is looking very promising on the near-term setup. One can hold their long position. Even in the decline, one can add the position with stop loss of 7,700.
Fine. That's a lovely advice that's coming in on Bajaj Finance. Remember, the stock is flat on a yearly basis, just 6.5% higher. And the statement that came in from the company as far as the quarterly performance is concerned was very heartening. So these are the levels probably you can add. Rajesh, one stock that I wanted to check with you was Nestle. Yes, it's a high ticket item, and 2 weeks from now they have a board meet which will announce a stock split. What are the charts telling you? Already the counter is at a record high, and we have often seen a very nice bump up coming before the stock split is announced traditionally in markets.
So this stock is a high quality stock. One can hold this stock in their long term portfolio, series of higher top, higher bottom formation across all time frame. Looking at the overall structure, we expect that even if any decline comes in this stock, is again opportunity to buy and accumulate this stock. Looking at the stock prices, 23,200 is the immediate resistance area. If it's processed, then these really can extend to 23,800 to 24,000 level also. On the downside, if you get any opportunity to buy the stock around 2200 or 22,200, that's the area where again stock may find some support buying action on the downside. So if at all you get any opportunity around those level, one should buy with stop loss of 22,000.
Fair point. The pre-open trades have settled. Nifty is now 85 points higher. This is a gap up that you will see mainly on account of a very sharp cut in global crude oil prices, the weekly expiry of the index today, and the fact that we've fallen very sharply over the last 1 week. That will provide enough fodder for bulls to see a nice bump up. Now, whether this gap up will be sustained or not remains to be seen, and that will be evident after the first 15 minutes, 30 minutes of the trade. But for now, a very nice bounce coming in, and it's a welcome relief. Let's look at the stocks that are contributing to this uptick. We have Reliance, which is up 0.22%, 23.19. We have HDFC Bank at 15.35, up 0.3%. And of course, we have Infosys 0.5% higher, 14.52. It's a very rare day that the 10 heaviest weighted stocks on the Nifty are showing a nice green tick. And apart from that, because of the cut in crude oil prices, you see paint companies doing well. Asian Paints up about 1.27%, 32.10 in pre-open trades. Would you have a view, Rajesh, on Asian Paints?
So there was a recovery is happening in the stock since last couple of trading session, but as market was in down move again, the stock is now trading near to its multiple support zone area of 3160 level, which is very important on the downside for the stock. If we see any pullback action and the stock manages to cross above 3220 level, then this pullback may continue further, and then possibly upside target we can see towards 3260, 3280 in the continuation of this pullback. But on the downside, 3160, 3150 is very important support area for the stock on the downside. Multiple time we have seen that stock has shown bounce back action from those levels. So those who have already bought, they can keep the stop loss of 3160 to hold their long position.
Okay, I want to come to you, Sunny, now. And since we were discussing Nestle, so another stock from the FMCG space, Marico. Let's talk about that, because that stock, I think, that will be focused today. The company announced that the domestic volumes grew in low single digits on a YY basis, with low single digit volume growth in Parachute coconut oil and Saffola edible oils, and of course low single digit value growth in value added hair oils as well. So what are your thoughts when it comes to Marico? I mean, where is this stock headed according to you?
Yeah, definitely. I believe for entire FMCG sector, commodity tailwind is something which will act in favor of the stocks like Marico as well as all the FMCG companies. So we have seen some moderation in input cost inflation, and to that extent, despite of a low single digit volume growth due to the weak rural recovery, we may see margin expansion, gross as well as EBITDA for all the FMCG companies, and that will draw a lot of interest from institutional investor for FMCG sector. And I believe Marico is surely headed for 625, 650 levels over the period of next 6 to 12 months. In fact, entire FMCG package looking good from margin perspective. Although we may see some value degrowth, but at the same time, volume may recover going forward, which is in the December quarter as well as March quarter.
Okay. What about you, Mr. Palvia? Your thoughts on Marico? I mean, what do the technical charts suggest for this particular stock?
So again, looking at the setup on the near-term basis, stock is almost trading near to its 50-day moving average, which is at around 568, 569 zone. If any selling pressure comes below those level, then we may see some, downtick towards 550 zone. Overall, if we analyze the short to medium term structure, it's in bullish territory. So buy on dips is the strategy. If you get any opportunity to buy this stock in the decline towards 550, 555 zone, it's a good price again to re-enter in the corrective move. On the higher side, 585 is the key level to watch for. If it crosses, then it may continue its uptrend.
Okay. PCBL.
Okay, ladies and gentlemen, the markets are now open in front of you. Nifty up 90 points at 19,520 as far as the initial trades are concerned. Nifty Bank 220 points higher, 44,178. Remember, the gap up has happened as far as the index is concerned, mainly on back of short covering, mainly on back of a dip in crude oil prices, and the fact that we've had a very, very sharp pent up demand coming in 1 hour yesterday in trade. Okay, so with this gap up at 19,533, the first resistance on the Nifty has been taken out. The second resistance is at 19,555. Now let us see what are the stocks that are contributing to this uptick on the Nifty. We'll focus on the index heavyweight first. Okay, HDFC Bank 1541, 0.8% higher. Reliance 2316, flat at the moment. Infosys 1% higher, 1457. This is the impact of a very sharp rally happening on the Nasdaq in Wall Street yesterday. Let's look at TCS 1.1% higher, 3576. How about other banks? ICICI Bank very close to its 200 DMA, 936, 0.7% higher. In the green is Axis Bank. Axis Bank is in the red, 0.5% lower, 990. What about SBI? 0.5% higher, 590. And what about Kotak? 0.4% higher, 1728. This is a good opening as far as the Nifty is concerned, and it is now rising rapidly. 19,552. Remember, I told you the second resistance is 19,558. Let's see whether it breaks it or not. FNO stocks apart from index heavyweights. Lower prices of crude oil, OMCs will shine. Hindustan Petro 2.6% higher, 256. RBL Bank 254, 2% higher. L&T Housing Finance 1.8% higher, 131. Birla Soft 1.5% higher, 498. Let's look at the Bank Nifty. It's the first day of a fresh expiry for Bank Nifty. 252 points higher, 44,214. Nifty IT Index 241 points higher, 32,050. Let's look at the broader markets, the advanced decline ratio, and then we'll go immediately to Rajesh Palvia to see what his plan for the day is. It's a very, very strong opening move. 1,573 stocks in the green, just 150 in the red. It's a full bull charge that you are seeing on Dalal Street. All 19 indices that we track are in the green. The Realty, the small cap, and the Nifty PSU Banking Index in the green. That's the broader theme as far as markets are concerned. Nifty at the moment 19,530, 94 points higher. Rajesh, the second resistance on the Nifty on the intraday basis at the moment acting up. What would you do? Is the bounce over, or is there more steam left?
I think Shailji, as we are holding with 19,500, some short covering action may take further buying momentum, and we can see Nifty to move, Nifty spot to move 19,560 to 19,580. That is the area where we can see this momentum can extend further. So those who are holding a position on the long side, they can trail their stop loss to 19,500 on the Nifty spot and hold the position. Another 30-40 point up move we can see in the continuation of this trend which we are seeing since opening. On the stocks front, Shailji, my focus is currently at RBL Bank. Very smart move is taking place on the RBL Bank, and the stock is now breaking its previous swing high. So I think RBL Bank one can look at to buy at the current level. Keep your stop loss at 251, and on the higher side, upside target we are expecting towards 262 to 264. So RBL Bank is looking very promising at the current juncture. One can look at to buy this stock after this opening. And another segment, as you already mentioned about OMC companies. So from that space, in the petro, one can look at as stock has shown a good buying tick in the opening. So now HPCL is looking promising, and looking at the overall setup, we believe that that if stocks holds 252 during the day, then possible upside target we can see towards 265 to 268.
Absolutely. Let's do one thing. Let's pull up Infosys as well on the screen. And Mr. Palvia, I want to ask you about Infosys. I mean, there's a sudden spike that we are seeing on this particular counter, 1% uptick there. What are your thoughts on Infosys, and what are the important levels for this particular stock?
So stock has already formed a base at around 1425, which is almost coincide with its 50-day as well as 200-day moving average. And since last two trading session, we are seeing that recovery is happening in the stock. As in the previous session, also most of the IT stock has shown a good recovery, and they have supported Nifty to recover from the previous low of around the 19,300 350 zone. So looking at the recovery in IT, most of the large cap IT, we expect that Infosys may contribute further, and possibly 1480, 1490 is the immediate target where stock can move further higher. The overall structure on the near term basis is on the bearish side, but this recovery can extend further. So those who are already holding or buying this stock at current level, they can keep your stop loss at around 1435. Upside target 1485 to 1490 we can see during the day.
Okay. Tanya, for the moment, the second resistance on the Nifty is providing a hurdle as far as this index is concerned. A century on the Nifty now. We have about 5-7 minutes of trade in front of us. 19,537 is what I see. A 300 point gap up on the Nifty Bank now, 44,230 in front of us on both these indexes. So the weekly expiry on the Nifty prompting short covering, and a fresh expiry, weekly expiry on the Nifty Bank is making traders aggressive on the long side as far as stocks like ICICI Bank and Axis Bank are concerned. Coming to Sunny, anything that catches your fancy, Mr. Agarwal, in the opening trades? A view that you would have on PCBL, earlier Philips Carbon Black.
So we are positive as far as PCBL business is concerned, one of the largest carbon black producer of India. At the same time, their capacity is likely to go on stream this year, especially on a specialty carbon black side. So that will aid in the margin expansion. At the same time, the lower crude oil prices augurs well for the PCBL. So we have seen that after a swift rally in the crude oil prices by $10 during the last 2-3 weeks, we have seen some pressure in the stock price of PCBL, and now with the crude oil prices again correcting, there is upside momentum as far as PCBL is concerned. I don't have number handy with me what is the capacity and what is the expanded expansion that is going to happen, but I am sure that financial year 24 will be the year where we may see a very robust earning growth as far as PCBL is concerned, and I feel the fair value of the business is around 200 to 20 rupees from a short to medium term perspective.
Okay, absolutely. NIIT, this is also one of the top gainers. I would say 3% uptick there. 121 is the level. Mr. Palvia, what are your thoughts on NIIT? I mean, what are the important levels when it comes to this particular stock?
So there is an uptick, but if we look at the near-term, short-term setup, stock is in consolidation, as we have seen rally in the stock in recent past, but now stock is consolidating since last 3 weeks. So looking at the near-term setup, on the higher side, the major resistance for the stock is at around 125, 126. If at all stock crosses those levels, then this rally can extend towards 135, 140 zone also. But 125, 126 is the key level on the higher side. On the downside, 116 is the key support area. So I think some consolidation is likely to be there in the stock prices, and once we get the breakout above 126, this rally can extend towards 135 to 140.
Okay, I'm waiting, Tanya, for the second 5 minute candle to close on the Nifty. There is a very, very strong underlying thread of strength that is there in the broader market. A second 5 minute candle closing above 19,555 will trigger a very, very sharp rally on the Nifty today. Whether it is intraday or not, that is to be seen a little later. But for now, a lot of high beta and very discerning stocks are rising very sharply. Let's first focus on the defense theme. And in front of me is BEL. We are most likely at a fresh record high on BEL at about 141 in front of me. The counter is now up 1.5%. Apart from BEL, the entire shipbuilding space is in the green. Cochin Shipyard, 5% higher, 1093. Garden Reach Shipbuilders, 4.5% higher, 839. We have Bharat Dynamics, 3% higher at about 1008, and Marsgaon Docks, 2.5% higher at 2188. Immediately to Rajesh Palvia. Anything in the defense space that catches your fancy, Rajesh?
So I think Shailji, BL is the first stock where we are expecting that this momentum can extend, because if you look at the setup, stock managed to view breakout on the daily chart of its a triangular kind of formation on the daily chart, and the trend line breakout is clearly there. So we expect this breakout may give furthermore boost to the stock prices, and possibly this stock can move further higher towards 148 to 150 zone in a positional basis. So BL is looking very promising. One can buy and accumulate this stock. Keep your stop loss at 136. Another stock that is HL, but again, looking at the setup, yes, we expect that HL may also get some more buying interest at the current level, and possibly once stock crosses above 1960 zone, then this stock can also show some contribution in the upward rally, and possibly 2000 is the immediate level where we can see stock to move further higher from the current level.
Absolutely. And Mr. Palvia, let's look at some of these railway counters. We are seeing strong traction there as well. IRCTC, the likes of BEML, as we mentioned also, and then we have IRCON as well, RITES and RVNL. These are also in focus. What are your thoughts on railway stocks, and any stocks that you like that are on your radar at this point in time?
So overall, we have seen most of the railway stocks have done well in recent past, and now since last couple of trading sessions or a couple of weeks, we are seeing some consolidation action is happening in most of the railway stocks. Be it IRFC, RVNL, IRCON, all these stocks are consolidating since last couple of weeks. Overall structure is bullish. I think once this stability comes in the market, once Nifty able to sustain about 19,600, then some aggressive buying or aggressive bets will start taking place in the market, and then at that time, yes, this is the opportunity again to buy and accumulate these railway theme based stocks. So RVNL is our preferred pick at this current juncture. Very strong setup across all time frame, so one can buy and accumulate these stocks. Once we get the breakout above 178 on the RVNL, then possibly this stock can scale up to the target of 200 also in very short period of time. So our stop loss to buy RVNL at current level is 164. Another stock that we like is IRCON. IRCON is also looking promising, very narrow price range since last couple of trading session, and looking at the overall structure, we expect that if stock manages to cross above 146, 148 level, then this stock may also exhibit further more bullishness towards 165 to 170 zone in the positional basis. So IRCON is one can look to buy at current level with the stop loss of 134. Even the another stock that we like from that space is Titagarh. Titagarh is also looking very promising, and stock has delivered very decent return in last couple of months. And looking at overall structure, again, the stock is consolidating in very narrow price range. So Titagarh is also a stock where we like, and one can buy and accumulate this stock with stop loss 740. Upside target we are projecting towards 850 to 900 for Titagarh.
Okay, absolutely. And let's pull up Nazara Tech also. This stock is in focus, and this is after Singapore subsidiary of Nodwin Gaming, a material subsidiary of Nazara Tech, that has acquired 100% stake in the game marketing agency Publish ME. So this is on the back of this news, and you can see a sharp uptick there when it comes to Nazara Tech. And this entire internet theme that is buzzing Zomato also up 4%. But first, Mr. Palvia, let's talk about Nazara Technologies. I mean, what do the technical charts suggest for this particular counter?
So overall structure is bullish. We have seen some corrective moves since last couple of trading session, but stock has taken the support from its multiple support zone area of 820, and now we are seeing that good pullback action from those level. Almost in today's move, stock managed to give breakout of last 5 days consolidation range. So near term, short term setup is looking very attractive. 820 is the stop loss to buy and accumulate this stock. Upside target immediate on the trading point of view. 900 is the immediate target. If at all stock crosses above 900, then this rally can extend towards 1050 level also. So overall structure is looking promising, and stock is already shown a good buying tick in today's move. So I think this momentum can extend further in like next couple of trading session, and possibly stock may head towards 900 to 920 in a short period of time.
Okay, and what about Zomato?
So Zomato is also looking bullish, and already stock is now trading near to approaching to its multiple supply zone of 106, 108. If at all stock crosses those level, then this rally can extend towards 120 mark also. As we are now having World Cup, so a lot of
Hmm.
business action is going to come in this QSR space. So I think Zomato is one stock where one can look at, and I think numbers will improve in next quarter as order flow will increase due to this World Cup event. So I think Zomato one can look at current level 96 should be your positional stop loss. 120 is the target where we expect in Zomato in next couple of week.
Okay, a lot of stocks are moving thick and fast, and one of the most important players in the way sentiment is decided upon is ICICI Bank. I'll request the PCR to draw the daily chart of ICICI Bank. And coming to you, Rajesh, very, very strong bounce coming in from 200 DMA, which was tested positively yesterday at 927. That was the intraday low of ICICI Bank, and a nice bounce. Is there a swing trade in the making for the month of October as far as ICICI Bank is concerned? Rajesh.
So Shalji, as we discussed in the beginning of show also that 44,400 is key level for Bank Nifty. If at all Bank Nifty has to display some short covering action, then 44,400 needs to close. Then we will see a short covering action in the Bank Nifty. So contribution from where the contribution will come in the Bank Nifty? Yes, ICICI Bank is one stock where we are seeing that risk to reward is very favorable, almost. Good quality stock, a large cap bank, where we are seeing stock prices are near to very important support area. So risk to reward is very favorable for ICICI Bank to play this pullback rally. And I think ICICI Bank, HDFC Bank, these two stocks may contribute to furthermore upside in the Bank Nifty from current level. So ICICI Bank, one can yes buy with stop loss of 925, and possibly this pullback can extend further towards 965, 970 zone, where again stock may face some supply. But yes, one can buy for another 2 to 3% kind of pullback in the ICICI Bank. 925 should be your stop loss.
Okay, absolutely. And let's pull up RBL Bank as well. Well,
Yeah.
this particular counter, this is up over 108% in just 1 year. So, and right now, if we see the current share price as well, it is up to the tune of 2%. And the private sector lender has also reported, total deposits at 89,774 crore rupees for the quarter ended September FY24, and it is up over 13% on a YOY basis and 5% on a quarter-on-quarter basis. So, what do the technical charts now suggest for this RBL Bank, Mr. Palvia? I mean, Is this bull run gonna continue going forward as well?
Yeah, very strong buying action. Despite of volatility in market, this stock is clearly showing outperformance, and we have seen RBL Bank, even Bandhan Bank, both these two banks both have displayed a very different behavior compared to other banking stocks from the private space. Stock has already given a breakout of its multiple supply zone on the weekly chart, which was happened already in the previous week. That level was at around 240 level, 242 level. So till stock is now holding to 42 level on week basis, then possibly this breakout target is clearly indicating that this stock can head further higher towards 265 to 270 also in the positional basis. So our view is bullish on the RBL Bank on a positional basis. 270-75 zone can be seen in the next couple of weeks. So one can buy and accumulate this stock with stop loss of 241.
Right. Tanya, we'll just focus on the Nifty now. The second resistance has now been taken out, and two important things have happened. We've had the first 20 minutes of trade, and the gap up that we saw has been sustained. Now it's getting stronger, 108 points higher, 19,542. The Nifty Bank 300 points higher, 44,256. So the theory of a short covering is working very well on the Nifty. Coming to you, Rajesh, and I'd request you to see the Nifty's 12th October 19,500 call, which is at 122 rupees. Would you advise a long trade on this one? What are the charts telling you, and what is your prognosis on the option chain?
Yeah, definitely, Shailji, one should look at to buy call option of 19,500, 550 also. That because looking at the overall setup, we expect that this short covering may take Nifty further higher towards 19,600, 650. That is the next major challenging level for the Nifty in the continuation of this up move. So one can, yes, definitely buy 12th October next weekly expiry option of 19,550 call option that is currently trading at around 107, 108. And yes, possibly we can see a target of 140, 145 in very short period of time. Yeah, maybe if for the next 30 minutes, if we hold this 950, 50, 19,500 mark, then possibly we can see this momentum can extend during the day itself towards 19,580 to 19,600 zone. So at that time, this call option may deliver you good profit. So 140, 145 is the target. Keep your stop loss at around 88 rupees.
Right, it's only a matter of time. I'll show you live FNO prices of options of Nifty and Bank Nifty. But for the moment, as Mr. Parvia suggests, keep an eye out on 19,500 Nifty call for the weekly expiry ending October 12th. At the moment, the price is somewhere like 122 is what I see. And actually it's 136. So over the last 3-4 minutes, when Rajesh began his commentary, the price has moved from 122 to 136. This is something that needs to be watched out. Remember, the third resistance now on the Nifty is at 19,630. This is not to say that you'll see the third resistance coming into action today, but the kind of rally that we've seen in the first about 20 minutes of trade points to a sharp uptick that is likely to be seen getting better and better. That's what the intraday view is, and that's based on how Infosys is moving. At the moment, it's at contributing about 21 points to Nifty's gain. HDFC Bank is contributing 16 points to Nifty's gain. ICICI Bank is contributing 14 points, TCS 11 points, and L&T Mindtree Titan Kotak. Actually, it's a sea of green on the Nifty. If you look at the 50 stocks that make up the index, only 3 plus 3, 6 plus 2, 8. 8 are in the red and 42 are in the green. That points to a fairly sustained rally that we are seeing, and given the fact that the first 15-minute candle is green, any move above the high of the first 15-minute candle should be captured by in the money call at that point of time. 19,500 for you as far as markets are concerned for today. Anything else that you've spotted, Tanya?
Absolutely, Shell. I think Nazara Tech, if you look at the stock, it's up 6%. We discussed it. And, I want to discuss about HDFC Bank also. This particular counter has been underperforming. What are your thoughts on HDFC Bank, Mr. Palvia?
So Tanya, there is an underperformance in this stock, but due to merger of this HDFC Bank and HDFC, there is a price hangover is taking place in the stock prices. But still, stock is almost trading near to its important support area. And now, if the stock crosses and above 1555, then we can see some follow-up buying also in the stock, and then we can see some more recovery in the stock prices. Though overall, a near-term, short-term structure is still on the bearish side, so that is likely to create some pressure in the pullback action. But the major short covering, which we can see based on the data, that is will takes place above 1565, 1570 zone. So if at all stock crosses those levels, then we can see some buyers again, will come in the stock, and then we can see furthermore follow-up buying action to take place. So 1565, 1570 is the zone where we again, review this stock. If at all any short covering starts above those levels, then this stock can show good return in next couple of weeks. So one can look at to buy this stock for positional perspective, buy and accumulate this stock for the short to medium term portfolio. And I think it's a very good quality stock which is available at a very attractive price point. So I think there is a very risk to reward is in favor to buy and accumulate this stock at the current juncture. One can keep your stop loss at around 1490 and hold this stock for next couple of weeks. I think we can see a good amount of rally will takes place in the stock.
Okay, absolutely. And let's talk about some of the stocks from the tech space as well. Birla Soft, let's pull up this particular counter. It's the top F&O gainer from the tech space. Mr. Palvia, what are your thoughts on Birla Soft? I mean, what are the important levels to watch out for?
So Tanya, most of the mid-cap IT stocks have started a good recovery, as we have seen. Some buying action was there in the previous session also for IT stocks. So mid-cap stocks have started again, good traction. So Birla Soft is one of the outperforming stocks in mid-cap IT space, and I think looking at the overall structure after this recent corrective move, again stock is getting buying interest, and I think one should. Hold their long position, or one can initiate a buy also in this stock, as overall structure for Birla Soft is on the bullish side. 495 is the stop loss, and I think once stock again manages to cross above 515, 520 marks, then this really can extend towards 540, 550 zone also. So overall, mid-cap IT is getting buying interest, and I think if in today's session also, we can see good traction in most of the mid-cap IT. Another stock that emphasis go for. These all stocks are looking promising, and buying interest is there for mid-cap IT stocks. So I think another 2-3 trading session, we can see this rally can extend for most of the mid-cap IT stocks.
For 3%, and 3% today. 1970 is the level. What are your thoughts on HAL, Mr. Palvia?
Yeah, as we discussed earlier also, that from defense space, VEL and HAL, these two stocks are looking promising, and we are projecting target of 2000, 2050 in the continuation of this pullback, which is started from last trading session. Stock is almost taken the support from its multiple support zone area, and I think this corrective move is over, and this stock may start again further upward journey. So 2000 to 2050 is the next target where we can see HL can move in the short period of time.
Okay. Tanya, these are the two good stocks that you've marked, and look at Birla Soft now. since you've put it on air, the stock is gaining rapidly. A good swing trade in the making as far as Birlasoft is concerned. Very high volume structure on Birlasoft at the moment. If you look at the price, up 3.5% at 506.50 on the cash side. Already 50% of volume of 5-day average is already traded on Birlasoft, and the first half an hour has not even passed. So the volume at the moment is 9,10,000 shares, and very, very strong move coming in as we speak on Birlasoft. Coming to other stocks that we need to discuss, you've also pointed out Hindustan Aeronautics, very, very sharp rise in volume as of moment. The price that you see is 1968, and again 50% of volume that you see on a 5-day average is already done, which is 7,10,000 shares. Nifty gathering fresh strength, Tanya, and now at 19,581. Let's look at the call that we had discussed, which was 19,500 for the week ending October 12th on the Nifty. At the moment, it's at about 134. Remember, we started discussing it at 122, if it reminds me correctly. The other stocks that are hitting new highs today are from across the board. As far as the FNO is concerned, it's only Coromandel International, but let's move a bit broader. You had discussed Philips Carbon Black, fresh record high, 3% higher, 183. Medant, this was discussed by Milleen yesterday, 1.8% higher, 754. And Chalet Hotels, 1.3% higher, 584. Very, very strong traction coming in the markets. Birlasoft now up 508.50, 3.5% higher. Tanya.
Okay, absolutely. And Shail, I think let's shift our focus now to Updata Services. This company got listed yesterday on the Lal Street, and it listed almost at 285 rupees, a discount of 5% on the National Stock Exchange, and compared to its issue price of 300 rupees. So we have the management with us right now. We have with us Mr. Raghu Tangirala, who is the Chairman and MD at Updata Services. Thank you so much, sir, first of all, and very good morning. Thank you for taking the time out and joining us here on Business Today Television. So, firstly, your thoughts on the listing that we have seen yesterday?
Not the listing or the price. We are more bothered on how we run our business, what we want to do, our plans. That's what. If you look at it, we've been in the business for about 35 years, and listing happens to be like, one is to exit for Motilal or investors, and two is for organic growth.
Fair point. Mr. Raghu, welcome to Market Today on Business Today Television. It's a pleasure to host you, sir, and congratulations for taking the first step into capital markets. Updata Services is a provider of services that are seen in buildings, in office complexes, and it's the second biggest player in this particular segment. The money that has been raised would be also utilized to reduce working capital and debt in the coming quarters as well. Sir, could you please brief us on the kind of expansion plans that you have in mind over the next 3-4 quarters? Where are the new buildings coming up for managing their services, and where do you see demand coming from geographically? Mr. Raghu, can you hear us, sir?
Just now, yes. All this time, I couldn't. I can hear you
okay,
now.
Could you please share with us the expansion plan? Could you please share with us the expansion plans for the next 3-4 quarters?
Yeah, 3-4 quarters. If you look at our objects of the issue, there is about 80 odd crores for inorganic growth, which is in the blind pool. However, we have funds which can be fungible. So we would try to add this at least by about the next 2-3 quarters. By inorganic, maybe about 20-25 crores on EBITDA. Otherwise, we grow at 20-25% across all our businesses. So that would happen.
Mr. Raghu, could you just brief us about what Updater Services does? It's an unusual stock, perhaps the first of its kind to get listed on the Lal Street. You manage the employee background verifications for big companies like Hyundai, PNG. What are the main constituents of the revenue that you've clocked so far? Could you just share with us the sales breakup, sir?
Sure, great. Good you asked me this. Updater Services, basically we started off as an integrated facilities management business. What that means is we manage large facilities. It could be an airport, it could be an IT park, could be a hospital. When we say manage, we do all the utilities in terms of the back-end engineering, the cleaning services. We run that facility. Like I told you, it could be an airport or it could be an IT park. So that is the major business what you showed that. That's about 60-65% of our revenues. We have other business services like what you said, employee background verification. We have sales enablement. We have audit and assurance. These are all other business services. Even though facilities management itself is a business service, we have just split it because this is more of a blue-collar workers. The other business service is more white-collar. So that is the difference. So we are basically a business service provider. Yes, you're right. We are probably one of the first, but there's also a listed player who does similar to what we do. But however, I think what you said is right. We are unique.
Okay.
Fair point, sir. If you could just share with us the debt. Yeah, Tanya, go ahead, please.
Yeah.
No, sir. You can go ahead, please.
No, on the debt is what you asked. If you look at 31st March, we had a net debt of about 10-11 crores. We had a net in the parent company of 175 crores. We had cash in the subsidiary companies of 165 crores. So net debt was about 10-11 crores. This was as of 31st March 23.
Okay, absolutely. And sir, let's talk about the attrition rate as well. And if we look at the rate for FY23, it was 78%, which is quite high. So if you could tell us more about that.
Yeah. I tell you, we roughly have about 67,000 odd employees. Out of that, about 55,000 would be on facilities management space. So that's basically blue-collar workers. The industry average is about 100% attrition. That means people leave in 1 year. We're talking at the bottom of the pyramid. Now, if you look at attrition and if you try to dissect it, it's only people who leave within the first 30 days are the maximum. Because there could be migrant labor, there could be people outside, they don't fit into the job. That is the attrition rate. If you really look at real attrition, because 1 to 30 days, we take it as training period. So this is actually data from the actual books. But if you take the real attrition, it would not be more than 20%. So the maximum of attrition happens between day 0 to day 30. So that the figure is actually misleading as 75, 78%. The real attrition could be close to 20%.
Sir, this is Shail this side. A couple of questions on how your revenue stream has grown over the last 2 or 3 years, and that's mainly on account of acquisitions that you've done over the past 36 months. Could you please share with us the guidance as far as revenue is concerned over the next 1 or 2 years, and also how profit after tax will move?
Yeah, I'm a little constrained to give you actual numbers. However, because you asked the previous, I can tell you, last 3 years, we have grown about 20% organically. That means without any acquisition. If you add acquisition, we've grown at 32%. So if you look at 5 years CAGR, organically, we've grown 20%. Inorganically, we had it's about 32%. Now, going forward, like I told you, we have a plan and we have the objects of the issue is to also grow inorganically. We will grow at about maybe 35 to 30% from the standard 20-22%. This is because of both organic and inorganic. However, when we say inorganic, if there's an acquisition and it's 12 months old, we call it organic anyway, because it can't be inorganic forever. So if an acquisition happens and it's after 12 months, it becomes organic. So we would grow at that 25% range. And profits wise, we had last year we did about close to 7%. So I mean, this was EBITDA. So 5%, close to 4.5%, 5% will be the PAT. So we would do that also at about 20% range. I mean, grow at 20% even at the PAT level.
Right. Okay. Mr. Raghu, when you look at the kind of business that Updater Services provides, it's of course large on the revenue side, but the fact is that EBIT margins and net profit margins remain squeezed in businesses such as yours. The 3-year average on EBIT margin is just 3.7%, but that's the nature of the beast, and that's well accepted risk as far as shareholders are concerned. How do you see the EBIT margin or the net profit margin moving over the next 1 or 2 years, sir?
Like I told you, the PAT margins, we plan to move about 20% growth. It happens also because of inorganic. However, since you said 3.5%, 4%, yes, that's the PAT margins. But it would improve drastically because of the numbers, what you see are reported numbers. There are a lot of adjustments to be done, which are all capital in nature. I don't want to get into that. But we will definitely grow at about 20% from what we are today. However, if you compare us with our other listed entities who are in similar services, we are far superior. When I say far superior, we are at least 2 times more than them in terms of everything. There are only a couple of listed companies in this space. So we are real leaders there. If you look at numbers, we should be far superior there.
Okay, fair point.
Absolutely.
Sir, could you please again brief us about your debt picture? A total debt of about 176 crores on the balance sheet of Updater Services, and the IPO that was raised was also to pay off partly, if not fully, the debt on the balance sheet. What's the game plan forward?
You're right. The objects of the issue is to also retire the debt. It is partly as per the document, but since funds are fungible, we will fully retire our debts of 175. However, I told you we have cash of 165 sitting in our subsidiary companies. So like I told you, net debt was only about 10 crores, but we will retire the debt in a parent company, and this cash is actually fungible. So if you can get that math right, we will be cash surplus in spite of with or without the issue.
Okay, absolutely got that. And also, sir, the company is considering, venturing into the fields of audit and assurance and sales enablement. So, if you could tell us more about that.
Great. We are already in audit and assurance. We are market leaders there. When we say audit and assurance, not financial audits. These are audits of stock, audits of supply chain. We do for a lot of FMCGs where we audit their stock, authenticated, and then we also audit up to the warehouse to distributor, depots, and then up to retail. So that is the business when we say audit and assurance. That we are market leaders. We have some of the marquee names in the country, and we also do claims processing for them. That's also part of audit and assurance. We process the claims of the distributors and dealers, then the company pays. So that's the business on audit and assurance.
Okay. That was Updater Services for you, Mr. You wanted to add something, Mr. Tangirala? Please go ahead, sir.
The question you asked. No, they didn't answer the question.
Fine. Thank you so much, Mr. Raghu. Yes, of course you did, sir.
Thank you.
Thank you so much for your time, Mr. Raghu Tangirala. He's the chairman and MD of Updater Services Limited, a company that was listed on Dalal Street yesterday. That is as far as the corporate radar section of Market Today is concerned on BTTV as of now. Before we wrap up the show, here's how the markets are at the moment in front of you. Nifty 19,535, up 100 points after the first 45 minutes of trade. Remember, today is the weekly expiry for the Bank Nifty. The index is intensely under pressure because of shorts that are in the system. Given the fact that it's the weekly expiry, a lot of shorts seem to have been covered, and that's the reason why you see the gap up being sustained after 45 minutes. 19,536 in front of you. The Nifty Bank, it's the first day of the weekly expiry for the Nifty Bank, and primarily because of ICICI Bank, you see a very nice uptick coming into Nifty Bank. 44,234, 270 points higher. Also giving strength to the Nifty at the moment are the IT stocks. It's a 404 point rise on the Nifty IT index, 32,213, and all four stocks in the index, which is TCS, Infosys, Wipro and HCL Tech, are firing all cylinders when it comes to gains for the intraday basis. In the broader markets, you see defense and PSU stocks rallying fairly sharply, and the sentiment as far as the advance decline ratio is concerned for the first 45 minutes on Thursday, which is the 5th of October, favors bulls. Tanya.
Okay, absolutely. That was the market wrap for you from Shell, and markets clearly in the green. IT stocks supporting the markets as we speak. And on that wonderful note, thank you so much, Shell, as always, for sharing the excellent data with us and being with us here on Business Today Television. So with that, it's time for me and my team now to wrap up this edition of Market Today. But you don't have to go anywhere. You just have to stay tuned to to BTTV because there's lots, more coming up for you only on BTTV. So stay tuned, and many thanks for watching for now.
Tell us what is on your radar, what looks good.
Incidentally, Shell, whenever markets go down like this, my shopping list becomes longer and longer because there are so many ideas that we have to look at. So, two investment ideas. One is from the tire stroke OEM segment, Apollo Tires. You may argue that crude oil prices are elevated, whether the offtake will be there or not. But I think I was reading a report yesterday with the new launches that are lined up until December 23, Shell. And without a tire, you can't roll out a new vehicle.